If you're sitting on savings right now and wondering what to actually do with that money, this video is going to change how you think about investing in Canada forever. Because here's the truth nobody tells beginners: you don't need $10,000, you don't need a finance degree, and you definitely don't need to understand complicated stock charts to start building real wealth in 2026. You just need the right roadmap. And that's exactly what I'm about to give you. Welcome back, everyone. If you're new here, I talk about personal finance, investing, and money strategies specifically for Canadians, because let's be honest, most investing advice online is made for Americans, and it just doesn't translate the same way when you're dealing with things like TFSAs, RRSPs, and Canadian tax rules. So today, we're breaking down exactly how you can start investing in Canada this year, step by step, even if you're starting from zero. By the end of this video, you'll know exactly which accounts to open, how much money you actually need to get started, and the simplest strategy to avoid the mistakes that trip up almost every beginner. Let's get into it. The first thing you need to understand before you invest a single dollar is where you're going to hold your investments. In Canada, we're lucky because we have two incredibly powerful accounts that most other countries simply don't offer. The first is the TFSA, or Tax-Free Savings Account. This is hands down one of the best wealth-building tools available to Canadians. Any money you earn inside a TFSA, whether it's dividends, interest, or capital gains, is completely tax-free. Not tax-deferred, not taxed later, actually tax-free forever. Every year, the government gives you new contribution room, and if you haven't used your room from previous years, it carries forward, which means many people already have well over $90,000 of available contribution space, even if they'd never invested before. The second account is the RRSP, or Registered Retirement Savings Plan. This one works a little differently. When you contribute to an RRSP, that contribution actually reduces your taxable income for the year, which can result in a nice tax refund depending on your income bracket. The trade-off is that you'll pay tax when you eventually withdraw the money in retirement, ideally when your income, and therefore your tax rate, is lower. For most beginners, especially those in a lower income bracket right now, the TFSA is usually the smarter starting point. But if you're in a higher tax bracket already, the RRSP can offer serious immediate benefits. Now, once you understand these accounts, the next question is, where do you actually open one? This is where a lot of Canadians overpay without even realizing it. Traditional big banks will happily set you up with an investment account, but they often come loaded with high management fees that quietly eat into your returns over decades. Instead, most beginners are far better off using a low-cost online brokerage. Platforms like Questrade or Wealthsimple have become extremely popular in Canada because they let you open a TFSA or RRSP in minutes, with little to no account fees, and commission-free trading on many investments. So let's talk about what you actually invest in once your account is open, because this is where most beginners freeze up. Here's the good news: you do not need to pick individual stocks to be successful. In fact, trying to pick winning stocks as a beginner is one of the fastest ways to lose confidence and money. Instead, the strategy that has proven itself over decades, and the one most financial experts recommend for beginners, is investing in low-cost index funds or ETFs. These are essentially baskets that hold hundreds or even thousands of companies at once. When you buy a single ETF, like an S&P 500 index fund or a broad Canadian equity index fund, you're instantly diversified across an entire market, which massively reduces your risk compared to betting on one or two individual companies. A popular and simple approach many Canadian beginners follow is what's called an all-in-one ETF portfolio. These are single funds that automatically balance your money across Canadian, American, and international stocks, and sometimes bonds too, all based on your risk tolerance. You literally buy one fund, set up automatic contributions, and let it grow over time. It's boring, but boring is exactly what builds wealth. The excitement of day trading or chasing hot stocks might feel thrilling, but statistically, it rarely outperforms a simple, consistent, long-term index investing strategy. Now let's address the elephant in the room. How much money do you actually need to start? The honest answer is you can start with as little as $25 or $50. Seriously? Many Canadian brokerages allow fractional investing or have no minimum deposit requirements at all. What matters far more than the amount you start with is the habit you build. Setting up an automatic transfer of even $100 a month into your TFSA, invested consistently into an index fund, will outperform someone who waits until they have $5,000 saved up before they finally start. Time in the market beats waiting for the perfect moment, every single time. Of course, no beginner's guide would be complete without a warning about the mistakes to avoid. The biggest one is letting fear or overthinking stop you from starting at all. Markets will go up and down. That's completely normal, and short-term drops are not a reason to panic sell. The second mistake is checking your portfolio every single day. This leads to emotional decisions that hurt long-term returns. Set your investments, automate your contributions, and check in maybe once a quarter. The third mistake is ignoring fees. Even a difference of 1 or 2% in annual fees can cost you tens of thousands of dollars over a few decades, so always know what you're paying. So to recap quickly, open a TFSA first if you're a beginner, choose a low-cost platform like Questrade or Wealthsimple, invest in a diversified, low-fee ETF rather than trying to pick individual stocks. Start with whatever amount you can, even if it's small, and most importantly, stay consistent. Investing successfully in Canada isn't about timing the market perfectly or finding some secret stock tip. It's about starting early, staying patient, and letting time and compound growth do the heavy lifting for you. If this video helped clarify how to actually get started, do me a favor and hit that like button. It genuinely helps this channel grow and reach more Canadians who are trying to take control of their finances. Drop a comment below telling me whether you're planning to start with a TFSA or an RRSP. I'd love to know where you're at in your journey. And if you want more videos like this one, breaking down Canadian investing, taxes, and money strategies in simple terms, make sure you subscribe so you don't miss what's coming next. This has been Canadian Finance Hub with James, and I'll see you in the next video.